Global equity markets were fairly soft over the past 24 hours. US markets got off to a slow start after European markets did see some falls. European equity markets were influenced by the news out of the UK that their economy shrank in the fourth quarter of 2010. Their economy contracted by 0.5% after growing by 0.7% in the third quarter. Commentary does suggest that the fourth quarter was impacted by the very harsh weather that the UK and the Europeans did see through the latter part of 2010. If it hadn't have been for this, then their economy would have likely been fairly flat. This was negative news for equity markets, but we have seen plenty of activity for the Kiwi dollar overnight. The Kiwi is now trading at 76.50 against the US on Wednesday morning. Global equity markets were still relatively weak despite the International Monetary Fund providing some optimism for economic growth in the year ahead. This has come in their most recent economic forecast, which they have lifted from 4.2% overall up to 4.4%. They do believe that we will see some slightly stronger growth coming out of the advanced economies, particularly out of the US, where recently President Obama has lifted and put some more impetus into their labour market, which will help their economy overall. However, any economic recovery is going to be in the form of a two-speed recovery, those in the developing economies really providing the growth. It will be interesting to see how China performs in the year ahead, with the IMF predicting that they will shy away from the strong growth we saw last year, but still be just shy of 10% growth in the year ahead. This will be good news for exporters from New Zealand. Supply issues for many products means that only small changes in supply dynamics can have big effects on prices down the track. This has been evident in the market for cocoa over the past few months. Political unrest in the Ivory Coast has seen a ban on exports over the past few months. Ivory Coast produces about a third of the global production of cocoa, and as a result of this, we have seen prices increase by 20% since late November when they had their most recent elections. This has also seen speculators and hedge funds enter the market, and many are now predicting that we will see prices spike up to levels that haven't been seen since 1979. So for those of you that do enjoy a bit of chocolate after dinner or even a chocolate cake at lunch, be prepared to watch out for these prices as you may see some lifts down the track.